Subscribing to the True Potential YouTube channel is quick and easy. Simply go to your YouTube app on your phone, type in True Potential and press the red subscribe option. You'll then be notified as and when new videos are released.
Welcome back everyone to Morning Markets on Wednesday the 2nd of September. A couple of things that the team at True Potential have been discussing this morning. The first of which was looking at how equity markets and asset markets in general performed yesterday. Good start to the month with positive equity market performance across the US and Europe. The FTSE 100 here in the UK being the standout, performing slightly differently, falling 1.7% over the course of the day. And I'll come on and discuss that in a little bit of time. Other asset markets, just looking at what was going on there, thinking about bonds and the sovereign and at the corporate space. We saw sovereign yields come down a little bit yesterday after they had moved up over the course of the month of August. So in the UK, the 10-year gilt trading back below 30 basis points, and in the US, the 10-year Treasury trading at 68 basis points from the high that it had achieved last week of around 70 basis points. Currency markets, not a lot to report there. A little bit of euro weakness against the dollar, some 15 to 20 basis points. But apart from that, no significant real changes in currency markets over the past 24 hours. Turning to the UK, I think it's an interesting thing to reflect on that we've touched on over the past number of weeks, improving economic data points. We've looked at the PMI number, which is 55, above 50, signalling expansion. We've just had house price data this morning. House prices increasing for August, 3.7% year on year. We've also seen retail sales rebound quite nicely post the lockdown measures that were taken earlier in the year. So on a broad basis, the economic data is supportive of the UK at the moment. So why is the FTSE not mirroring that? A lot of it comes down to the composition of the FTSE 100 as an index. It's very much international in its orientation. A lot of the sales that the companies make are to international levels. They're not within the UK. And that's important because of the one aspect that we have seen over the past number of months is sterling strength relative to the dollar in particular. That in itself is a negative for overseas earnings of the companies in the FTSE 100. When they're translated back into sterling, it reduces the earnings growth that's coming through. So that was probably one of the factors that is impacting, and that's starting to be seen in how companies are discussing the outlook, just given that move in sterling that we've seen over the past number of months. So that is impacting the FTSE 100, maybe not impacting the FTSE 250 just as much, but interesting to see yesterday that the FTSE 100 and the FTSE All Share fell both at similar levels, about 1.7%, as I said, on the 100 and about 1.5% in the All Share. So something to think about there, just the difference between what an index represents and whether it is a true representation of a domestic economy. On the economic front yesterday, we continued to see improving data points from the US. We had the ISM, which looks at the manufacturing sector, a gauge of how factories are performing. Again, that index came above 50 and indeed improved from the level that we saw in July, where we've reached now 56 versus 54 in July. I think the other thing when we dig into the ISM numbers a little bit is just to look at what's happening with the new orders component, where we have seen new orders increase and I think reach a high level that we haven't seen since 2004. But also within it, we've seen inventories reduced. And that means that over the coming months, we should continue to see relatively robust production numbers, given that inventory will have to be rebuilt at the same time as demand has remained robust as well. So that's a positive. The one bit within the ISM that is not cause for concern, but is slightly different, is just the employment bit. The employment reading hasn't improved just as much as some of those others. There might be a lagged effect there, or it might be that we could see a productivity improvement going forward. So that's something to continue to watch over the coming days. The other things just to note, yesterday in the US, we did see a number of Federal Reserve Board members speaking. They were suggesting that the need for fiscal support remains, and that's something that we've discussed in the past is kind of deadlocked at the moment between the Democrats and the Republicans. Republicans yesterday have tried to move forward with a much smaller package of fiscal support measures to try and at least bring the negotiations back to the table. So that bears monitoring over the coming weeks. So we'll see what happens there. That's it for today. If you're finding Morning Markets useful, please do like it on YouTube. Thanks again. Bye.
Thanks for watching. If you enjoyed this video, please leave a like and don't forget to subscribe to the True Potential YouTube channel. If you have any questions or requests for future videos, let us know in the comments.